Hello people, a very good morning to all of you. So guys, we are doing this chapter on goods sent on return or approval basis. So in yesterday's session, guys, we have completed illustration number 2. So today we'll be heading towards illustration number 3. It says that Mr. Kumar sells goods on approval or return basis casually. Point to be noted. He has sold goods worth 1,50,000 rupees, which is sold at a profit of 33.33% on sale. So profit on sale is given, which has been awaiting approval from the customer on the date of closing the books. After the expiry of the period, the customer have accepted goods equivalent to 75% of the cost of goods and the rest considered to be rejected. You are required to show the necessary journal entries as on the date of closing the books. The journal entries required to be passed as on the date of closing the books, and the entries after the expiry of the period and the treatment of the goods. So this is the time period. Have they given the date, guys? No. So this is the current financial year, and this is the next financial year. Guys, goods is sent somewhere here. Though they have used the word goods sold, guys, in this chapter, sold goods will be treated as sent goods or goods sent. So goods has been sent in the current financial year. This is date of sending the goods. Goods worth 1,50,000 has been sent. So this is the sale value. Okay. Which was awaiting approval for the customer as on the date of closing the books. So which means till the end of the financial year. That is 31st of March. The confirmation has not come. Till 31st of March, there is no confirmation. After the expiry of period. So let's suppose the period is getting expired here. This much is the period. Okay. After the expiry of the period, the customer have accepted the goods equivalent to 75% of the cost of goods, and rest considered rejected. Now this we will wait. We will pass entry till this. Now what is the requirement, guys? You are required to show the necessary journal entries as on the date of closing the books. Which means here. So on 31/3, what journal entry you pass? That is what has been asked. So heading, guys, in the books of Kumar, heading will be journal entries. In the books of Kumar, heading will be the journal entries. And please note on the proper format. Date, particulars, LF, debit, credit in rupees. Please note down the format and then we'll go forward. So on date of sending the goods, guys, the journal entry I am passing only for your knowledge purposes. Otherwise, not required to be passed. This is not asked. I'm only doing it for knowledge purposes. So when the goods is being sent, guys, what is the journal entry? It is a casual transaction. So under casual transaction, the goods which are sent for approval will be treated as a normal sale. So what will be the journal entry? Trade receivable, account debit to sale, 1,50,000 rupees, 1,50,000 rupees. This is not required. This we are doing only for knowledge purposes. Not required. Why do you want to waste time? Nothing wrong. If you put extra information, what is going to happen? You can do it. Nothing wrong. Marks will not be deducted. That much you can be assured. Now, guys, the transaction has been taken place somewhere here. Okay. Till the end of the year, there is no confirmation. So as on the end of the year, what will we do? Have they told the books is closed on 31st of March or 31st of December? Nothing is mentioned. So on date of closing books, what entry will you pass? Wonderful. Inventory directly. You will not reverse the sale. As on 31st of March or 31st of December, will you not reverse the sale? Because ownership is not being transferred. When ownership is not transferred, you cannot have something as a sale. Sale means ownership transferred. So till 31st of March, the acceptance is not come. Therefore, the ownership is not transferred. By that virtue, the sale what you've recorded is not valid. We have to reverse it. So therefore, the entry is going to be sale account debit, reversal of income to trade receivable, same 1,50,000 rupees. This 1,50,000 is a sale value. Okay. Now, what am I supposed to do? On the same date of closing the books of accounts, I need to pass one more entry. Which entry is that? I need to adjust my inventory. Here, the inventory is under my position or under the position of the customer? Under customer's position. So, what will be the journal entry? Inventory with customer account debit to trading account. IWC, can you write an exam? You lose marks. Now, this is written at the selling value, guys. This has been written at the sale value, sale price. Okay. This is recorded at sale price. This will be recorded at IWC to trading account will be recorded at cost price or NRV, whichever is less. That is very important. Please do not forget. Now, guys, selling price is given 150. Cost price I have to calculate. Cost price is not given. So what do I assume? Can I assume something or can I calculate cost price? Can I calculate cost price or not? How? Cost price is equal to selling price minus profit. Selling price is 1,50,000. What is profit? Sir, 33.33% profit on sale. If 33.33% is profit on sale, then what is on cost? What is on cost? 50% on cost. So now, guys, this is selling price. Do I need profit on cost? I calculated 50% profit on cost. Do I need profit on cost at that place? Not required, because this is selling price and profit on sale is available. So 1,50,000 is the sale value. If I multiply with 33.33%, or in other words, if you take a calculator, I'll tell you the shortcut. Very simple trick, guys. Now, when this is, let's suppose, selling price, and this is also, let's suppose, profit on sale. Both you can multiply, that is, while calculating the profit, with selling price, you can multiply the profit on sale and get the profit. That is extra effort what you're doing. Whenever sale price and profit on sale is given, or whenever cost price and profit on cost is given, take your calculator. 1,50,000 is sale price. 1,50,000 minus 33.3334. 33.3334. Percentage, if you do, you'll get 99.999. So, which is nothing but 1 lakh rupees. Your cost price is 1 lakh rupees. So, I'll tell you one more time what to do. 1,50,000 minus 33.33334 percentage. If you do, automatically you will get the cost. What were you doing so far? You recorded 150 here. Then you did 1,50,000 into 33.334% divided by 100. Then you got the profit. Then you subtract it. Extra step, not required. Straight away, whenever I'm telling you, the relation is established. Please understand, selling price into profit on sale is given. If the relationship is established, directly from the selling price, you can minus the percentage of profit on sale. Whenever cost price is given and profit on cost is given, if I want the selling price, cost price plus profit on cost percentage, if you add, automatically you get the selling price. Are you able to follow? So what did I do now? Sir, 1,50,000. 1,50,000. This is selling price. From there, I need to minus profit to get the cost. So I'll directly minus 33.33334 percentage. Minus 33.33334 percentage. So you get 99,999.999. If you round off, it is 1 lakh rupees cost price. Are you clear with this point? Now this is cost price, guys. Now let's suppose cost price is 1 lakh and profit on cost. Profit on cost is 50%. If I want my selling price, what will I do? I want selling price. Cost price plus profit on cost percentage. Cost price is 1 lakh. So 1 lakh plus 50%. 1 lakh plus 50%, if you do, you'll get 1.5 lakh, which is the sale price. For you to plus and minus, guys, please ensure that the base has to be same. The relationship between the both should be same. Both should be selling, both should be cost. Only then this plus and minus will work out. Or else it will not work out. If this is clear, I'll go forward. Online people, are you clear what we did? What we did now?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Now, guys, I got my cost price, which is 1 lakh rupees. So with this, I'll record my inventory ka journal entry. 1 lakh, 1 lakh. Any problem here? So as on the end of the year, guys, we have done all the entry. So you're required to show the necessary journal entries as on the date of closing books. So on the date of closing the books, 2 entry I recorded. After that, and record the journal entries after the expiry of the period. So after the expiry of the period, what is happening, guys? Period is getting expired here. Period is getting expired here. They're telling that the customer have accepted goods equivalent to 75% of the cost of goods. Cost of the goods sold. What is the cost? Cost price is 1 lakh. 1 lakh 75% is being accepted, which means 25% is not accepted, means rejected. Correct, no? Now, guys, for 75% goods is accepted, will you pass any entry next year? No. Janak, for acceptance of good next year, to the extent of 75%, will I pass any journal entry for acceptance? No. Siddhi says yes. Samiksha says yes. Arjun says yes. Yes, okay. Online people, my question to all of you. See, this is the expiry of the period. After expiry of the period, 1 lakh costing goods. In that, 75% is been accepted. 75% of the cost of goods is been accepted, and rest 25% is rejected. So my question to online students, for 75% of accepted goods, will I pass any journal entry the next financial year?
Yes, sir. We should pass.
Yes, sir.
Yes, sir.
Very good. So my dear friends, Yash and Janak, tell me, why will you not pass entry for the 75%? Boss, on 31/3, the goods which you sent, since the approval did not came, you reverse the sale entry. Now when the sale is accepted, again you have to pass the sale entry. Now, the acceptance is given in which year? The acceptance is given in next financial year. So you have to record your income. Guys, you have to record your income. You have to record your income in the year when the acceptance is given. Since the previous year acceptance was not given, you reverse the sale. In current year, the acceptance is given, you have to record the sale. So what will be the journal entry? In the next financial year, on the date of acceptance, what will be my journal entry? Trade receivable account debit to sales. At what price? At what price? At selling price. So 75,000 rupees, guys. That is for 1 lakh rupees. If I take 75%, 75,000 rupees is cost price or selling price? It is cost price. So selling price is equal to cost price plus profit. Cost price is 1 lakh, sorry, 75,000 rupees. I'm coming to that. 75,000 is cost price plus profit is 50% on cost. So this is also cost. This is also cost. So I can directly add 75,000 plus 50%. So your selling price is 1,12,500. So it will be 1,12,500. Now, guys, this is one way of calculating. Now, also another way of calculating is that, guys, 75% of the cost of goods. If 75% cost of goods is accepted, which means 75% cost is accepted, means 75% will be sale value also, no? Cost price is 1 lakh. In that, 75% is accepted, 25% rejected. Selling price is given to us. Selling price is how much overall? 1.5 lakh. So 75% of this is accepted. Like that, it is understood now. So or directly on 1,50,000 rupees, if you calculate 75% also, you'll get the answer. Now, why I did in this method is because sometime in the question, they'll not give you this 1,50,000 or they may not give you this. In that case, you need to do, you should be in position to do the answer in both the ways. That's why I've taught that. So if cost price is given, you will do it the way I've done it. In the question, had they not given you 1,50,000 rupees, had they given you cost information and profit on cost information, then what you would have done? You would have done in this way. So I'm teaching in both the methods. Now, see, example, let's say the same question. Exactly the same question is coming in your exam. But instead of your selling price, they're giving the cost price 1 lakh and profit on cost 25%. This is the only change. Still, you should be in position to do it. So from that point of view, I'm teaching. Are you able to follow? So this 1.5 lakhs ka 75% if you take, you'll get same 1,12,500 only. Okay, not okay? Tell me people, okay, not okay?
Yes, sir. Yes, sir.
Now for the balance
Yes, sir.
25% of the goods, which is rejected, will you pass any entry? Technically speaking, yes. The entry that I will pass for this is, I will reverse the inventory with customer. So inventory with customer will be reversed and closing stock should be debited. But in your entire syllabus, they have not considered this point. So even we will not consider. But technically we have to, I give you the logic. Because IWC is currently in debit. If you see here, the account is not closed. IW is open. You have to close this now. So when will this get closed? When the goods is coming back to us, when the inventory is no longer with the customer, then I'll reverse this and record my closing stock. Okay, not okay? So entries after the expiry of the period and the treatment for goods. So entries after the expiry period is that entry what we recorded now. Which entry is that? Trade receivable to sales. Treatment for goods. So when I did this question, I was expecting that they will do inventory with customer. Sorry, they will reverse the inventory with customer. Surprisingly, they have not done. I thought in this question at least, whatever is in my heart, no, the question institute will listen to that, and I thought they'll reverse it. But again, they have not done it. So we'll also stick out to the same thing. There's no need to pass the entry for the return of goods as they have been already been reversed on the closing date. Okay, the sale entry is reversed, I understand. But inventory with customer is not reversed, no boss. So that treatment we have to give. But unfortunately, they have not given this. So we'll stick on to this only. Are you clear with this? Online people, are you clear or not clear? This is reversal of sale. This is inventory with customer entry, which is happening on 31st of March or 31st of December. And this is the re-recording of the sale entry, re-recording of the sale entry in the next financial year to the extent of 75% of the goods. So total 3 entries, guys. Total 3 entries. If all of you are clear with this, I'll go to the next question. If all of you are clear with this, I'll go to the next question.
Yes, sir.
I'm waiting for other online students to answer as well.
Yes, sir.
Yes, sir.
Can we go forward? Okay. Illustration 4, guys. Okay, my again humble request to all the online students, guys, at any point of time, if you feel that you don't have clarity on a particular thing or whatever I said, you've not understood, whatever be the confusion, guys, I want you to stop me then and there and ask without any hesitance. Don't think what other people will think if I ask this question. Don't feel shy, guys. I'm giving you all the liberty. You can ask whatever you want to ask. I'm willing to explain 1 time, 2 times, 3 times, or even 4 times. So please do not hesitate. And now I'm not telling for the sake of saying it. I genuinely mean it. Because certain parts, guys, you will understand in 1 shot. Sometimes certain critical components has to be explained at least 2 to 3 times so that you get a clarity. So please do not hesitate. If anywhere you're getting struggling, if you're anywhere getting struggled, please then and there stop me and ask. Am I clear? Abhi, Ashwin, Chavi, Kavi, Sanjay, Shrikant?
Yes, sir.
Okay, very good. 4th question, guys. S Limited sends. So somewhere if you see the word is used is sold and somewhere it is sent. So don't get confused. In this chapter, as long as the goods is sent, it is sent only. Sometimes they may use the word sold, but do not get confused. S Limited sends out the goods to a dealer on sale or return basis. See, this is very important to be mentioned. Why? Because even in consignment, the goods are sent. So to differentiate, they have to mention a point. All such transactions are, however, treated as actual sale. Now, what is the significance of this particular line? Online people not responding. What is the significance or the importance of this line?
It is on casual basis.
Yes, it is on casual basis. All such transactions are, however, treated as actual sale and are passed through day book. Day book is basically one of the accounting book is called as a day book. Just before the end of the accounting year on 31/3/2020. Just before the end of the accounting year. So accounting year is ending on 31/3/2020. So which financial year we are into? Very good. 1920. 200 such goods have been sent to a dealer at 250 each. How many quantities been sent? 200 quantities been sent at 250, costing 200 each. So what is 250? What is 250? And what is 200?
Cost price.
$200 such goods have been sent to a dealer at 250 selling price, costing 200 on sale or return basis, and debited to his account. What is the significance of debited to his account means? Debited to his account means what? Will debit to whose account? Debited to his account. His means who? Customer. So when to be debit customer account? Debit means debtor account, debit to sales. Sale entry. So sale entry is recorded. Sale entry is recorded. Debit to his account is already given. So this is indication that trade receivable to sale is done. Of these goods, out of 200 goods, on 31/3/2020, 50 were returned. 50 were returned. As totally how many goods were sent? 200. In that 50 returned, 70 were sold. So 70 sold means, can I say accepted? For the other goods, 70 were sold, while the other goods, date of return has not been expired. So what is the balance goods? 80. Unexpired goods or unexpired period for these goods. Past necessary adjustment entry on 31/3/2020. I'll give you 2 minutes for all of you to complete this question. 2 minutes, not more than 2 minutes. Very simple question. Please write the proper format in the books of S Limited, journal entries, everything should be mentioned properly. Rupees wherever required, narration for all journal entries. Done, guys? Yash, done? I'll come. Are you done? Online people, who is done?
Completed, sir.
Okay, Sanjay is completed. Others?
Sir.
Super. Shrikant done?
Yes, sir.
Ravi done?
Yes, sir.
Ravi done. Okay. Now, guys, the goods has been sent. How many goods has been sent? 200 goods has been sent at 250 each. Okay. So please tell me what would be my journal entry for this? Trade receivable account debit to sale. 200 into 250 is how much? 50,000 rupees. Correct? Out of this 200 goods, 50 has been rejected. So upon rejection, what is the journal entry? Sales return or sales account debit to trade receivable. So when you do the reverse, you will reverse the sale price to the extent of 50 goods. So this will be 50 into 250, which is 12,500. The extent of 70 goods being accepted, we will pass no entry. No entry. For balance 80 goods, since the approval is not come. Since the ownership is not transferred, you cannot have a sale transaction. So you have to reverse the sale transaction. So what will be the entry?
Sales to
Yes, sales account debit to trade receivable. This will be to the extent of 80 goods into 250 each. So 80 into 250 is 20,000. This is one entry. Another entry will be inventory with customer. Trade receivable. So this will be 80 into, trading account. Inventory with customer to trading account. 80 into 200 at cost price, because cost price or market price, if you compare, which is less? Cost is less. That's why I multiply with cost. This is how much? 16,000. Now you clear how you got 16,000? Any other doubts in this? Sale entry for what? Not required, because the question is told already the goods which has been sent is already been debited to his account, which means the sale entry is already passed. So what necessary adjustment entry will you pass? They ask necessary adjustment entry on 31.3. So all these are the entries as on 31.3. Sale is before. So this entry is not required. You can write this entry, but you cannot write on March because this would have taken place earlier. Date of sending the goods will be earlier, different. So you cannot write 31st of March. That will be wrong. Marks is not allocated for that, so they should not reduce. But you never know, if anybody reduces, we cannot challenge also. Getting my point. So let's not take that risk. So I think we've covered all the entries, guys. Illustration 5. Can we go to illustration 5? Please confirm, all of you.
Yes, sir.
Yes, sir.
Now, guys, Cali company sends out its gas container to dealer on sale or return basis. All such transactions are, however, treated as actual sale. So which means what is the type of transaction? Casual type of transaction, and are passed through day book. Okay. Just before the end of the financial year, 100 gas containers, 100 quantity of gas containers, which cost them 900 each. So 900 is the cost price, have been sent to the dealer on sale or return basis and have been debited to his account. Debited to his account means debited to customer's account at 1,200 each. So selling price is 1,200, cost price is 900. Let me repeat the question one more time. Just before the end of the financial year, 100 gas containers costing 900 each has been sent to dealer customer on sale or return basis and have been debited to his account at 1,200 each. So debited to customer account. So when do we debit customer's account? When we make the sale entry or send entry at 1,200 each. Out of this, only 20 gas containers are sold at 1,500 each. Now this line is the tricky line. This has to be understood properly. You are required to pass the necessary adjustment entries for the purpose of profit and loss account and balance sheet. Guys, how much quantity of the good that has been set? 100 into 1,200. So what is my selling price? This is my selling price. Any problem in this? 100
No,
into
sir.
1,200 is 1,20,000 rupees. Out of this 100 quantity, guys, 20 gas containers are sold. Sold means accepted. So out of this, 20 are accepted. Balance 80 Anywhere they mentioned that the time has been lapsed or rejected, nothing is mentioned, which means time is still there. Time is still there. So time is not lapsed. Time not lapsed. Time not lapsed. Now they're telling that the account is already debited, which means the sale entry already recorded. So sale entry is recorded for what value? Trade receivable account debit to sale 1,20,000. 1,20,000. This entry is already recorded. Listen to me, don't do anything. Listen to me, don't do anything. This entry already recorded. I'll not focus on this. After that, there's a line that out of this, only 20 gas containers are sold at 1,500. My question is, what is this 1,500? And then what is this 1,200? Can somebody explain me this? Okay. Correct. Okay. Others? How many of you agree with Siddhi? When you read this question this way, it seems like that only, but that is not the reality. Now, Siddhi said that, I'll tell the reply for all online people. Siddhi said that, sir, let's suppose this is the company, Cali company. So this is manufacturer. This is Cali company. And this is dealer and customer. So manufacturer sold goods to Cali company for 900. So for Cali company, the cost price is 900. Correct? Cali company has further sent the goods to dealer at 1,200 rupees. So selling price for Cali is 1,200 and cost price for dealer is 1,200. Now, when you read this question, dealer sold. So obviously dealer is selling the goods. So dealer sold this for 1,500. So dealer gave this for customer for 1,500. So you may say that for customer it is 1,500 and for dealer it is selling price 1,500. That is not the case here. When you look at this particular question, it feels like that. But here, let me tell you what has happened. You'll be familiar with this petrol thing. That suddenly they will announce in the news that tonight midnight, like from that is like today midnight onwards, after 12 p.m. the petrol prices going to rise by 5 rupees. Now, please understand one thing. So this is the petrol bunk. This petrol bunk, can I say, will have the stock of petrol? This is the stock as on, let's say today. Today is what, 13th of July. This 13th of July, today stock is there in the petrol. Like in the bunk, there'll be big barrels underground where the petrol is being stored. When this petrol was procured by the oil company, let's say this is BPCL or let's say IOCL or HP, what will be the bunk? So they buy it at 100 rupees. Okay. Or they're supposed to sell it at 100 rupees. Forget what they've purchased at. Let's assume that they have selling it at 100 rupees. So until tonight, 12 p.m., you can sell this at 100 rupees. Government has announced today in news that after 12 p.m., the petrol value is raised. The petrol is raised and it will be sold at 1.5 rupees. It is sold at 105 rupees. Sold at 105 rupees. So my question to all of you, will the petrol bunk empty this entire barrel of petrol at 100 rupees? And whatever they buy fresh petrol after the price change, only then they will sell at 105 rupees. Are you able to follow? My question is very simple. On 13th July, let's suppose there is 1,000 liters of petrol. There's 1,000 liters of petrol in the storage, which is to be sold at 100 rupees. From midnight, the price is revised upward and they're selling it for 105 rupees. Now this 1,000 liters, will they first sell it at 100 rupees? Because they purchased at the original rate now. So that is old rate. The purchase has happened at the old rate. So sale also, will they do it at old rate? No. The old purchase also will be sold at the latest price. So the petrol which is there in the barrel, the petrol will be sold instead of 100 rupees, it will be sold at 105 rupees only. Are you able to follow? So here, let's suppose this is the bunk. Okay, this is a bunk, HP bunk or BPCL bunk. This petrol is supplied by BPCL to petrol bunk. So when government is announcing the revised price, Bunk has to pay BPCL on the revised price only. There are certain products where there's an agreement that I'll be sending the goods at a particular price, this price. If the price is getting revised, then on the revised price only you're supposed to sell. There are certain goods, when you send the goods, there is a contract mentioned that I'm sending the goods at this price. When this goods is there in a warehouse, and whenever I increase the price, you have to sell it at the increased price only. Like that, who will give condition? BPCL will give condition to its customer. For BPCL, Bunk is the customer. For Bunk, we are customer. Correct, no? So here what has happened is that initially the goods were sent for 1,200. Then globally the prices got changed. So Cali company would have sent the instruction to the dealer saying that now this 1,200 worth of goods which is costing 1,200 for you, now the cost has become 1,500. Sell it for 1,500. Sell it for 1,500. So initially we recorded sale value for 1,200. Correct, no? Initially when we recorded the sale entry, what did we do? We recorded for 100 barrel into 1,200. Now the price is revised upward. So for the upward revision, that is the difference between 1,500 minus 1,200. For difference 300 rupees, we have to further pass a sale entry to the extent of 20 barrels. Because on the day when this 20 barrels were sold, the original market value was 1,500. But when the goods were sent, on the date of sending the goods, it was costing 1,200. But when the goods were sold, on the date of sale, the values become 1,500. Only 20 barrels is sold. So to the extent of 20 barrels, we have to increase the sale price. So what will be my entry? Same entry, trade receivable account debit to sale. Here it is for 1,200. Here it will be for 1,500. 1,500 will you multiply with full 100 or only 20? 20. Only 20. Because for the remaining 80 if I sell, the price can be more than 1,500 or less than 1,500. So we don't have the clarity. So as on the date of sale, we have a clarity for 20 stocks. So for this 20 stocks, we will increase the value of the sale, which is how much? 30,000. Are you able to follow? Any doubts here? So here, now the cost for this dealer has become 1,500 rupees. Now he can sell it for further, adding his profit margin, he will sell it further. Yes, Siddhi. Correct. So now here, yeah, yes, tell me, Siddhi. It will get increased to the extent of only 20 barrels. See, please understand, this 1,20,000. 1,20,000 is the sale entry for 100 stock. Oh, sorry. I mean, not 1,500. You will record for difference. Yes, sorry. Yeah. So here, I'll not put 1,500 because what Siddhi is telling is that 1,500 may already 1,200 you've captured here now. So I'll capture balance 300 only. So it is 300. So that's why Janak said 6,000 by looking at the book. So it is 20 into 300. Yes, total 1,500 rupees is the sale value. Out of that, 1,200 is already captured in the first entry now to the extent of 20 barrels. So balance 300 only I need to capture to the extent of 20 more barrels. So 20 into 300, 6,000. Any doubts here, please? Everybody, please tell me if any doubts.
No, sir.
Totally 100 barrels, guys. 20, 80. These 20 barrels, initially when they were sent together, this were recorded at 20 into how much? 1,200, which is 24,000. Plus 80 barrels were sent for 1,200, which is 96,000. So 24,000 plus 96,000. If I add, it becomes 1,20,000. Then they're telling that these 20 barrels are sold. Sold at what price? It is sold for 1,500. Out of this 1,500, 1,200 already captured now. Balance 300 into 20 is how much? 6,000. So what is the total sale value for 20 barrels? 30,000, which is nothing but 20 into 1,500. So this entry already passed. I need to pass the difference. Am I clear? Now for the balance 96,000, what has happened? There is no confirmation. 100 gas containers costing 900 have been sent to dealer on sale or return basis and has been debited to his account at 1,200 each. Out of this, only 20 gas containers are sold. What happened to balance 80? Time not lapsed. So this 96,000 rupees, what am I supposed to do? First, I will reverse the sale entry. Second, I need to record the inventory with customer. Right? So please record the entry, guys. Coming back here. The first entry you're not supposed to record because it is already recorded. So you will record this entry. You will record this entry. Next, you will reverse the 80 barrels of gas which has been reversed. Containers. So it is what? Sales account debit to trade receivable. This is that 96,000 rupees. How did I get this? Sir, 80 containers into 1,200. 96,000, 96,000. Then what will you do? For this, I need to record inventory with customer, account debit to trading account. This will be at cost price or market value or NRV, whichever is less. Market value is 96,000, guys. What is my cost price? Can I say 900 cost price is already given? So 900 into 80, which is how much? 72,000 is my cost price. Yes, market value is 1,200. Cost price is 900. In this, what is less? 900 is less. So 900 into 80 container which is not being accepted or rejected. For that, I will record the inventory with customer account. Only 3 entries will come, guys. Only 3 entries will come. First entry, second entry, third entry. Yeah, correct. No, see, what is my total sale value? Total sale value is 1,500. I'm only talking about the 20 containers. For this 20 containers, total sale price is 1,500. Out of that, 1,200 is already recorded initial. So balance 300 difference only I need to record further now. Clear now? Good. If everybody is done with this, I'll go forward to the next question. We'll take a break. So let's take a break of 30 minutes, then we'll come back and continue. Yes, people, welcome back to the break. So let's head towards the next question. Illustration number 6, guys. It says that E Limited sends out its accounting machines costing 200 each to their customer on sale or return basis. Okay, so costing 200 each. All such transactions, however, treated as actual sales. So this is hinting that we have to follow the casual method of accounting and are passed through the day book. Okay. Just before the end of the financial year, that is on March 24, 2020, 300 such accounting machines were sent out at an invoice price of 280 each. Invoice price means selling price. Out of which only 90 accounting machines are accepted by the customer at 250 each. And as to the rest, no report is forthcoming. Show the journal entries in the books of the company for the purpose of preparing the final accounts for the year 31st March 2020. Please tell me, guys, what is the quantity of the machines that has been sent out? What is the quantity of the machine that has been sent out? 300 quantity of machine has been sent out. Quantity of machine has been sent out at an invoice price of 280 each. So 300 into 280. Please multiply and tell me what is the invoice price, selling price. It is sent at 84,000 rupees. Yes, out of this 300 machines, 90 machines has been accepted. 90 accounting machines are accepted. Out of this 300, 90 is accepted. Accepted by the customer at 250 each. At 250 each. As to the rest means for the rest of the machines. What is the rest of the machines? From 300, if I minus 90, what will I get? For 210, no time lapsed. Time not lapsed. Time not lapsed. Show the journal entries in the books of the company for this purpose. So initial sale is done at 84,000 rupees, guys. Now, when the initial sale was done, the initial sale price is 280. But when the goods were actually sold, it was sold for 250. Just like previous question, guys. Initially, the barrel was sold for 1,200. Then later, the price were increased to 1,500. So can I say there was an upward valuation? There's an upward revaluation of the sale price. Here, the original sale price is 280, and later on it was sold for 250. Like the petrol price go up, by announcement they also reduce, no? So initially the petrol were being selling at 280. Later they said that the price of the petrol is reduced. Now guys, in the barrels or in the stock of the bunk, the petrol is worth 280. That is, till the announcement was made, you're supposed to sell the petrol at 280 rupees. Once the announcement is made, you cannot say that I'll empty the barrel with 280 and for the fresh stock I will sell it 250. You cannot say. If the government is announcing the same petrol which is there in your stock, you have to sell it at the reduced price only. So here we have to reduce the price from 280 to 250. So how much reduction? 30 rupees I need to reduce to the extent of only 90 goods which is accepted and sold. So first entry, guys, is the sale entry. What will be the sale entry? First sale entry. Anywhere in the question have they mentioned that the original sale has been already debited to the customer's account, which means the first sale entry is not recorded. So March 24th, when the goods is sent, that entry is not recorded. We have to capture that. So on 24th of March 2020, final account on 31st of March they've asked. Okay, okay. Yeah, sorry, they've told that to pass the entries only on 31st of March. So this is not required, but I'm doing it for knowledge purpose. So what will be the entry? Trade receivable account debit to sales, which is 84,000 and 84,000. Being goods sent to customer, being 300 items of goods sent to the customer at 280 each. 280 each. Second entry will be on 31st of March. When the acceptance is done, acceptance entry is not given. On the date of acceptance, have they given the acceptance date? Since the date of acceptance is not given, we presume that 31st March is the date of acceptance. Now guys, for these 90 goods, these 90 goods were originally sent at 280 each. Later they're telling that these 90 goods actually were sold for 250, which means they were sold for 30 less. So 280 ka entry already passed. For 30, I need to further reduce it to make it 250. To the extent of 280, the entry for 90 goods is already, 90 machines is already accounted. But the actual sale price is 250, which means from 280, I need to minus 30. To increase my sale, I have credited sale. To decrease my sale, I need to debit sale. So on 31st of March, I'll decrease the sale value. So sales account debit to trade receivable. So it is 90 machines into 30, 2,700. The moment you pass this entry, guys, the original sale was 84,000. In that, 2,700 is subtracted. So this is sales entry. This is reversal of sale entry. Am I clear or not clear? Please tell me if you have any problem. You have to start the entry from this part. From the second entry onwards, you have to start writing. This is the entry to be recorded on 31st of March. Now guys, for this 90 machines, the reduction in sale value has been recorded. What happened to the balance? Balance 210, there is no intimation. So for this 210 into 280, I need to reverse my sale entry. And for the same value, I need to record my inventory with customer. For the same value, I have to record inventory with customer. Not same value. I would say for same quantity, you need to record inventory with customer. So for 210 into the cost price, what is the cost price? 200. You have to record the inventory with customer. So two more entries, guys. 31st March 2020. Reverse the sales account. Sales account debit to trade receivable. Guys, here the reversal is happening for the balance 210 machine. The original sale value was 280. So when you reverse, you will still multiply with 280 only. 210 minus 280, 210 into 280. How much is the sale value? 58,800. So from this 84,000, you subtracted 22,700 and you subtracted 58,800. This is the net sale value. Whatever answer you get, that is the net sale value. Then on the same date, on 31/3/2020, you have to record inventory with customer, account debit to trading account. To trading account. Here the entry will be 210 quantity into 200 is the cost price, which is how much? 42,000. 42,000. Any problem here? Guys, any problem here? I'm not getting any responses from online people.
No, sir.
No, sir.
No, sir.
The first entry is for the reduction in the selling price to the extent of 30 rupees. Original sale value was recorded 280. Later the sale value became 250. So if I want to record the quantity at the net sale price 250 means, then from 280 I need to minus 30 rupees. So this entry is recorded already. This entry I recorded now. So automatically, guys, from 285 minus 30, balance will become 250. So when you record this journal entry, automatically the sale price for the 90 machines will be at the net sale price. This is reversal of the sale for the 210 machines, which is not confirmed, not rejected yet. And this is the inventory for that. That's all. Anybody still doing, or can I go to the next question? Online people, anybody still doing this question? Can I move on to the next question?
Completed.
Completed. Offline people, shh. Here. Illustration number 7. A sends out goods on approval to few customers and includes the same in sales account. Look at the line, guys. Now the language is changed. Look at the language. A sends out goods on approval to few customers. Sends out goods on approval, and they've included the same in the sale account, which means they've treated the goods sent as a normal sale. So this is a casual transaction. On 31/3/2020, the trade receivable balance stood at 1 lakh rupees. On 31/3/2020, the trade receivable balance stood 1 lakh rupees, which includes 7,000 goods sent on approval. So in the trade receivable account, guys, the balance, the debit balance of the trade receivable account is 1 lakh. In that 7,000 is pertaining to the SOGRA concept. Balance 93,000 is the item pertaining to the normal sale. Any difficulty in understanding this point? Because this particular business is doing both normal sale and SOGRA sales. So 1 lakh is the total trade receivable from both the verticals. Out of that, 7,000 is the receivable from the SOGRA vertical. So balance 93,000 rupees is the trade receivable from the normal sale vertical. So this 1 lakh includes 7,000 goods sent on approval against which no intimation was received during the year. So can I say, to the extent of the 7,000 rupees, guys, trade receivable to sales account, the first entry, when the goods is sent, that first entry is already captured, already been captured. These goods were sent out at 25% over and above the cost price. So this is profit on cost or profit on sale. This is profit on cost. And the 7,000 is the sale value. Where it was sent to Mr. X 4,000 and to Mr. Y 3,000. So the 7,000, if you see the breakup, to X we sold goods worth 4,000 and to Y we sold goods worth 3,000. That's how total put together 7,000. So from X we have to receive 4,000, from Y we have to receive 3,000, put together total 7,000 rupees is receivable. X sent intimation of acceptance on 30 April. 30 April is, can I say, the next financial year? So which means as on 31st March of current financial year, X has not given any intimation. So therefore I need to reverse the sale and I need to book the inventory for X's stock. And Y return the goods on 10th April, which means this fellow also till 31st of March did not give me any intimation whether he'll accept or reject. So for this also I need to reverse my sale. I need to record my inventory with customer. Make the adjustment entries and show how these items will appear in the balance sheet on 31st March 2020. Show how the entries will be made during April 2020. Value of the closing inventory on 31st March 2020 was 60,000 rupees. Value of the closing inventory on 31st March 2020 is 60,000 rupees. Make the adjustment entries, journal entry, and show how this item will appear in the balance sheet. They are asking us the balance sheet also. Can you feel the question? Yes. Now guys, goods on which date it was sent, that is not been given, but that entry is already recorded. So we don't have to record that entry, but I'm only doing for a knowledge purpose. So on date of sending the goods, what is the entry? X account debit, Y account debit. I not mention trade receivable here, guys, because customer name is given. So far in all the other questions, if you see, they did not mention the specific name of the customer. They called either customer or a dealer. The name was not specified, hence we recorded trade receivable. Now here, since the name is specifically mentioned, I will record X account debit, Y account debit, 2 sales. We sold goods worth, or we sent goods worth 4,000 to X and 3,000 to Y. So total sale is 7,000. This entry you do not record. This entry already is being captured. That's why they're telling that the total receivable is 7,000. We have to focus on the next entry, which is as on 31st of March, which financial year, guys? On 31st March 2020, that is we are in the financial year 1920. If you look at this statement, guys, till 31st of March 2020, both X and Y has not given any intimation. Therefore, I will reverse sales account debit to X account to Y account. Here the name is specifically given now. So why trade receivable? You have mentioned trade receivable. Okay. But since name is given, I would specifically go with name because X and Y name is given now. So I will go with this. I know they have written trade receivable, but we'll stick on to X and Y. So 7,000, 4,000, 3,000. So this is the cancellation of the original sale entry because the goods is still lying with the customer for approval. Then on 31/3/2020, we have to record the inventory with customer. So inventory with customer account debit to trading account. To trading account. Guys, 7,000 rupees, guys. 7,000 rupees is my sale price. So cost price is nothing but sale price minus profit. Sale price is 7,000. If you get profit on sale, guys, you can directly subtract it. So 25% is on cost. What will be on sale? If always cost will be more, sale will be less. Always profit on cost will be more. Why profit percentage is more for cost? Because cost price is less now compared to sale price. If the value is less, then percentage has to be more to get the same profit. For sale price, the value is more. So the percentage what you'll apply will be comparatively less. So if it is 25% on cost, it will be 20% on sale. So minus 20%. So 7,000 minus 20% if you do, you'll get 5,600. So 5,600. Directly you can minus it, guys. That's the beauty of this calculator. So we have done the adjustment as on 31st of March, guys. They are also telling show the entries to be made on April 2020. So in April, what is happening? Guys, with regard to X, on 30th April, he is giving acceptance. So what will be the entry? New financial year. 30/4/2020. The next financial year. Next financial year. Will I record any entry for excess acceptance? Because last year, since he did not give acceptance, the sale entry was reversed. Sale entry was reversed. So now when he's giving acceptance, I have to recreate the sale entry now. So what will be the entry for acceptance here? Excess account debit to sales to the extent of 4,000. 4,000. This entry is that. Now guys, Y has returned the goods on 10th of April. So when Y is returning the goods, will you pass any journal entry? See, sale I have reversed, so I will not pass the sale entry. But with regard to inventory, I need to reverse. But that entry is not being followed anywhere in your ICA book. So you have to keep in your back of mind that when the goods is returned, I need to close my inventory with customer. So entry will be what? Closing stock account debit to inventory with customer. But this entry is not required to be present anywhere. So this entry is for the current financial year. This entry is for the next financial year. Now they're telling us to pass the balance sheet. In balance sheet, please pick up from this question, what all will you show in the balance sheet? See, when I'm preparing the balance sheet, this is a balance sheet for the entire business, where I'll capture all the transactions pertaining to both normal sale and the SOGRA sales. Therefore, can I say I'll capture this entire trade receivable balance, 1 lakh rupees? As on 31st of March, 1 lakh rupees. But in that, since the intimation both of them have not given, so we reversed the 7,000 worth sale. When the sale was reversed, guys, on 31st of March, the debtor also was reversed. So in the balance sheet, when I prepare, as on 31st of March, what will be the heading? An extract of balance sheet as on 31/3/2020. This word extract should be given. If you write in balance sheet bracket also, nothing wrong. But this word should be given because this is not a full balance sheet. Liability rupees, asset rupees. Guys, before you did the adjustment, my original trade receivable in the balance sheet was rupees 1 lakh. In that you reversed 7,000. So what is the balance? 93,000. This I'll capture. So guys, this is nothing but reversal of trade receivable. Guys, this I will not capture in balance sheet because this will go to my trading and P&L. Okay. So this I'll not capture. This I capture. Inventory with customer is debited, guys. Debit means debit balance. So inventory with customer is how much? 5,600. So inventory with customer, 5,600. 5,600 worth of goods is with the customer. So this will go to my balance sheet. This is going to my trading account, so I'll not write in balance sheet. Till this year end is over. Apart from that, there is one more information given in the question that value of the closing inventory as on 31st March is 60,000. Closing inventory means what? The inventory in our godown, our factory, our warehouse. So this is closing stock, our closing stock where the goods is under our control, our possession. So closing stock, how much? 60,000. Closing stock 60,000. So these three items you will present in the balance sheet. Is there anything else that I'll present? But people, most of them forget to record this. Out of pressure, they forget to record this. Let's see the balance sheet of the textbook. Perfect. This is the original sale value. I mean, trade receivable value after minusing 7,000. Inventory in trade. This is the closing inventory. Add inventory with customer 5,600. Total is 65,600. You can do this also presentation. We'll follow this presentation. We'll follow this presentation. If this is clear, I'll go forward to the next question. I mean, the concept is over here. Yeah. So we'll go to the next concept.
Can you show the whiteboard, sir?
Guess what? You're not on this chapter. We're done with only casual sale transaction. Next is frequent, then numerous. We'll be done by tomorrow. I'm coming to that. case, if all of you are done with this, let me know. I'll go forward. Now, guys, when we started this chapter, I said you that there are 3 categories under which the questions can be asked. In that, we've completed the first category. We've completed the first category. That is, if the transactions of Sogra is casual, then what happens? This we have completed. Now we'll be heading towards this. What will happen if the transactions are frequent? How the accounting will be done, how the presentation will be done. But unfortunately, we don't have any questions in your ICA study materials or MTPs, RTPs or past exam paper. We don't have any questions based on this concept. In your textbook, what they have done is they have given only a theoretical explanation and the format how this will look like. So I'll just explain this, how it has been done, and then I'll be heading towards, I think we'll stop today with this alone, and this I'll have to discuss for at least another 1.5 hours. And we have few questions based on this. So this will take it up tomorrow. So today I'll wind up my discussion with this particular concept. Case 2, guys, says that when the business sends goods frequently on sale or return basis. In this case, goods sent on accrual basis are not considered as sale, unless confirmation is received from the customer. In casual transaction, once you send the goods, you treated it as normal sale and you passed a normal sale entry. But here, if the frequency of sending the goods in the business is frequent, that is slightly more than casual, then we will not pass a sale entry unless the confirmation is given. In other words, I'll pass the sale entry only when the confirmation is given. In this case, goods sent on accrual basis are recorded as sale only when the confirmation is received from the customer. Then you may ask a question, sir. Goods are sent. If you're not recording a sale entry, for sending the goods, what control do we have? Very simple. For that, they are preparing this additional document. This format, what you're seeing, is not a journal or a ledger. I would say it is rather a presentation where you record the goods sent as a day book. It's an additional book that you maintain apart from your journal book, ledger book, etc., so that you capture the information. If you see, this entire book is bifurcated into 4 broad columns. So this is first column, this is second column, this is third column, this is fourth column. Goods sent on approval, this first A column, I'll mention this as A. This A has got sub 4 column. First column is the date on which the goods were sent. Particulars, to whom the goods were sent. What all were the goods sent? Description of goods. The party to whom the goods has been sent. If you remember the subsidiary book, we had prepared something called as purchase book. In the purchase book, the format was different. In that, we captured the person to whom we sent the goods. We also captured what is the description of the goods that has been sent. So in the particulars column, we'll capture that. Next is folio number. Ignore. Finally, what is the goods amount, worth of amount what has been sent. So for example, today is what? 13th of July. This has been sent to X. Let's suppose machine. We have sent goods to X. What is the particulars of goods? Machine. Worth is, let's suppose we have sent 10 machines of 10,000 each. So total is 1 lakh. We sent 10 machines, each machine costing 10,000 rupees. Next is goods return column. So within 31st of March, the customer may tell that out of these 10 machines, 2 are defective. So I'm returning. So date of transaction, let's suppose on 14th of July, he says that, sir, in that 10 machines are defective. So X has sent the machine. How many machines is sent it back? 2 machines costing 10,000 each. So amount is what? 20,000. So 1 lakh worth goods has been sent. From that 20,000 worth of goods has been returned. And he says that On 14th of July, he says that, sir, I'll keep 5 machines with me. He says that X is telling that, sir, I'll keep 5 machines worth 10,000 with me, which is 50,000 worth of machines. I'll keep it. So out of 1 lakh machines, what you've sent, 20,000 has been rejected, 50,000 has been accepted. So what is the balance? 30,000. 30,000 is a balance. Here, amount you can put in the balance column. You can put amount also. You can put the quantity column also. Instead of folio number, you can put quantity. But here, why I did not put quantity? Because this format is given by ICA. So I did not want to tamper it. So if you get a question based on this, you prepare this format and feed in the information. Very simple now. First column talks about what is the information of the goods that is being sent, how much quantity sent, how much value sent. Out of that, how much is returned. So goods sent on approval minus goods returned minus goods approved is equal to balance. It's like an equation in a tabular format presentation. When goods are sold on approval, the details in respect of such goods are entered in the first 4 columns. 1, 2, 3, 4. The first 4 columns will record the details of the goods that has been sent. Are entered in the first 4 columns of the book only as a memorandum record. The entry is recorded in the books of accounts for such transaction. The entry is recorded in the books of accounts for such transaction. When goods are approved, the details are entered in column number 9, 10, 11, 12 of the books. The personal account are debited as and when the goods are approved. Now what happens is that if you remember the subsidiary book, concept, guys, we created something called as a sale book. Correct? In sale book, what did we do? We captured all the details, what goods has been sent, on what date has this been sent, what is the quantity value. Like that for each and every transactions, one by one we recorded. And then at the month end we did a total. And what did we do with this total? This total was transferred to the sales ledger. From sale book, we transfer it to sales ledger. So what entry did we record in sales ledger? Let's suppose there were how many transactions in a month? Let's suppose there were 1 to 10 transactions. And all the 10 transactions put together value is, let's suppose, 1.5 lakh rupees. So when you created a sales ledger, guys, what was the posting? By sundries as per sales book, 1.5 lakh. Total sales you recorded. You recorded the total sales. You did not record the individual sales. Now just imagine, had you not created the sale book, had you did a normal journal entry, then for each entry, for each 10 entries, you have to do the 10 postings in the ledger. To save time, what did we do? We created a sale book where all the information was captured in the sale book and one single entry was recorded in the sales ledger. When did we record this 1.5 lakh? When the sale was done. So here, guys, the question is very clearly told that when the goods are sent, here you will not consider a sale. Only when the goods are approved, you will consider as a sale. The moment the goods are approved, you have to record the sale entry. So what happened here in subsidiary book? In the sales ledger, you created the total sales of the month, but you opened the respective party account. Let's suppose you sold this goods to 3 different parties. Let's suppose this is X, Y, Z. To X, you sold 3 transactions. I mean 3 transactions with X, 3 transactions with Y, and 4 transactions with Z. Then you capture all the 3, 4 informations independently in the independent ledger. X is debtor, Y is debtor, Z is debtor. So you would have captured 3 transactions here on debit side, 3 transactions on debit side of Y, and 4 transactions on debit side of Z. Only in the sales ledger, you will add the total month sale. Whereas for every individual transaction, you'll open an individual ledger and record the transactions individually. What will be the entry for that? You will debit the party account. That's what they're trying to explain. The personal account is debited. Personal account means what? Debtor account has been debited. So debtor account has been debited as and when the goods are approved. The moment you keep on approving the goods, on the date of approval, you will record the sale entry, debtor entry. The sale account is credited with the total amount at the end of the month. So what will be my entry on 31st of March? On 31st March, entry will be X account debit, X account debit, X account debit, Y account debit, Y account debit, Y account debit. Like that, Z 4 times will come. Z 4 times will come. Z account debit, Z account debit to sales. So what did you do? The personal account are debited as and when the goods are approved. So as and when the goods are approved, the personal account has been debited. And the sale account is credited with the total amount at the end of the month. Total amount at the end of the month. Are you able to follow? Are you able to follow? Here we are not recording journal entry. Please understand, in the subsidiary book, what concept we learned? Instead of journal entry, only we are preparing the subsidiary book. From the subsidiary book, directly we'll post it to sales ledger and debtors ledger. In debtors ledger, you will post as and when the approval is coming. In the sale ledger, you will post it at the month end. Guys, here instead of subsidiary book, it is this format. In this particular concept, journal entry has been replaced with this particular day book. This is called as sale or return journal day book. Sale or return. It's not sales return. Sale or return, because this is goods sent on approval or return basis. So sale or return journal day book. This is that book format. So here, as and when the acceptance is given, on date of each acceptance, you will open the respective debtors account. You will open the respective debtors account. In that debtors account, you keep on recording the entry on the debit side. Month end, whatever is the total, that is total sales, whatever is the total of this amount column, total sales will be recorded in the sales account. Okay, Nadu. Guys, on 14th of July, one machine is accepted for 20,000. 20,000. 15th of July, another machine is accepted for 20,000. 20,000. On 16th of July, another machine accepted 20,000. 20,000. Correct? Now the confirmation is coming. So what is my total? 60,000. So out of 1 lakh, guys, 20,000 worth of goods rejected. So 1 lakh minus 20,000 is 80. From 80, 60,000 worth of goods is accepted. Balance is 20,000. Okay. Now my point is that here on 14th of July, one confirmation has come. So you'll open X account ledger. On debit side, this is X's ledger. On debit side, 2 sales 20,000 on 14th of July. On 15th of July, 2 sales 20,000. Second entry will come. On 16th of July, 2 sale 20,000. Carried down 60,000. Brought down 60,000. Correct? When I prepare the sale entry, guys, that is sales ledger, you will not post the transaction wise or individually. You will take the total 60,000. By sundries. Sundries means many transactions. By sundries as per sale or return journal day book. Sale or return day book. 60,000 in one shot. That's what they're trying to put here. The sale account is credited with the total amount at the end of the month. So this is on 31st of March or whatever be the month end. Entire sale is recorded on credit side one shot. Whereas the personal account, that is individual debtor account, is debited as and when the goods are approved. So as and when the goods were approved, on each and every date, I have recorded the debtor entry. So you'll prepare what document? You'll prepare sale or return journal day book. This you'll prepare if the question comes. Along with that, you will prepare the sale ledger and the individual debtor ledger. When the goods are returned, the details are entered in column 5 to 8. 5, 6, 7, 8. However, no entry is made for such return of the goods. Why? Because initially you never pass the sale entry. When sale entry is not passed, where will you return and what will you return? So upon return, no entry is being made. So however, no entry is made for such return of goods since no entry was made at the time when such goods were sent for approval. Balance of stock. The balance of the goods lying with customer is ascertained and recorded in 13th column. 10 machines sent. In that, 2 is being returned. So we took 20,000, is it? Actually, this 10,000. 10,000, 10,000. Should be 30,000. 10,000, 10,000, 10,000. So 10 machines is being sent. In that, 2 has been rejected and 3 has been approved. So balance is 5. 5 into 10,000 is 50,000 rupees worth of goods is still balance. Understood? No. 10,000, 10,000, 10,000. Chumma. Okay. 30,000. Now clear? That's all, guys. Fortunately or unfortunately, there's no question based on this. But again, case 3 is also to some extent similar like case 2 with slight differences. So which I'll explain again in the next class. So we have few questions based on case 3. So that we'll solve it. And with that, we are done with this chapter. So tomorrow we'll be winding up with this particular chapter. Any doubts, please? No, sir. Abhi, Ashwin, Chavi, Kavi, Sanjay, Shrikant. Any doubts so far, please?
No, sir. No, sir.
No, sir.
What I explained was understandable?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Okay, I'll be sending this PDF to all of you. You can keep it with you for simple, easy language of understanding. This format is given in your. This is also given here. In case if you, I made the language a little bit simplified here. This language I've made it a little bit more simplified, so you can have this. And please read it without forgetting in the exam. Just because this question is not asked in any exam so far, or we don't have any question ICS study material, don't think that the question they'll not ask. Be prepared. If anything is not asked so far, it may come in future as well. No questions from this. On spot during exam, you have to write. That's what. Welcome to CA. Welcome to CA. I'm telling you, the case 3 is similar to that. So if you practice case 3, you'll get a hang on case 2. Right? So with that, guys, I put an end to today's session. I'll see you all in tomorrow's class from 5 to 6:45. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you,
Thank
sir.
you.